Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Dave Harden, founder and CIO of Summit Global Investments. He joins me to discuss key themes dominating 2024 and risk management in a high valuation environment. Dave, it's great to have you with us. Welcome to Trade Talks.
Thank you. It's glad to be with you today.
All right, you got it. And let's start with the key themes here. Certainly AI is one of them. Let's get your thoughts on what's dominating 2024.
Well, AI continues to dominate. It did very well in 2023, and 2024 earnings have been through the roof. That's pushed growth factors to do really, really well so far year to date. They're outperforming by a large margin, value factors and others, but everything is really broadening out as well. Semis are doing really, really well. They're off the charts this year to date. And that really pushed consumer services and technology is doing really well. So from a theme perspective, anything connected to AI is where you want to be so far year to date.
Yeah, it certainly seems that's the case longer term for sure as well. Let's talk about the macro environment here. What are your thoughts around the Fed? Are they still behind investors at this point?
I absolutely. The Fed they like it hot. They're letting it go a little bit here. I think his eyes a little bit more, that's Chairman Powell's eyes a little bit more on unemployment than it is on inflation per se, but investors want to stay behind the Fed. In other words, let them be in your back pocket and they're going to make the market move. And that's really, really good for investors right now. So if you're an investor and you're looking at how the Fed's helping you right now, they're in your corner, they're in the driver's seat, and they want you to have good returns right now.
Right. Well, one of the concerns is we know that tech trade is firmly in place. What about breadth broadening out a bit here? Are you starting to see more broad participation in the market overall?
Yeah, I think you're seeing that. Energy's doing really well year to date, where last year it kind of lagged. So we're seeing some broadening in energy. We're seeing broadening in materials as well. Industrials are coming out. I think industrials is an interesting space because as cutting happens, if the Fed right now is on target to maybe make 3 cuts in 2024, if that happens, and even behind the scenes doing some quantitative easing, the Fed remains very comfortable with this growth or hot market. You're going to see this expand into more of a cutting cycle, and that's going to really help some of these early cyclicals like industrials. Technology is still there. I think as a broad group, it's catching up with the AI. So overall, you're seeing a bigger spread, and that's very positive for the market. Even though there's high valuation, there's some areas of the market that are not as high valuation, and spreading into those areas is a good thing.
Right, Dave, perfect segue for my next question, because to your point, there is some high valuation in the marketplace at this point. From a portfolio perspective, how are you managing those types of positions? I mean, at some point you have to start thinking about taking profits or figuring out an income scenario around it.
Absolutely. So there's a couple things you can do as an investor and as a portfolio manager. One is not only couple, say, really, really high valuations, which we're seeing right now. We're definitely in a high valuation environment. If you look at a forward PE perspective, if you look at Nasdaq, S&P, any of the indexes, any of the type of relevant enterprise value to sales, price to book, et cetera, all of these. But what you can do is you can couple those high valuations with also high quality earnings. That's really, really important. You can couple those high valuations with high growth numbers as well. So look at the AI story and NVIDIA, for example. Off the charts numbers, off the charts earnings, they've been able to keep up with those valuations. And so you want to couple growth with high valuations. You want to couple high value or high quality earnings with those valuations. Those are really, really important to be able to put together so that you're in the right area. The other thing is that you want to look at where the money's going. So when I talk about, for example, possibly industrials doing well in this type of cutting environment, there's a lot of money that could be made there. So we want to be a part of that. We want to be a part of things that overall, the big picture, even though there's high valuations, can still make really good money. You also want to, I think, really manage your risk. You can do that through a number of ways. At SGI, for example, how we manage risk in equities, one of the things we do is we look at correlations. So it's not always about high valuations. You may have some that are higher valuations in your portfolio, but how do they correlate with the other positions in your portfolio? What is your overall beta? What is your overall exposure to management and to CEO changes and to SEC investigations and all the other red flags, if you will, that are out there that can really impact a company? You need to look at the overall risk of your portfolio in order to make sure that you, so to speak, ride the tide. And that's how you manage in high valuations.
All right. We appreciate the insight, Dave. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
You're welcome. Thank you very much.